The saga of Australia's big banks, interest rates, profits, public anger and threats from Canberra. As the Commonwealth Bank faced a maelstrom of protest following its decision to supersize the Reserve Bank's rate rise increase yesterday, a second bank, Westpac, posted an 84% rise in its full-year net profit to $6.3 billion. Westpac says it will now make a decision in coming days on whether to follow the Commonwealth's lead, with a further jump in its rates above and beyond the Reserve. But there is now an expectation that all four big banks will be as one on this. With all of the major banks now having released their end-of-year financial results, their combined cash profits have surged more than 25% to a record $21 billion. Little wonder the drums for assertive action are reaching fever pitch, and not just in Canberra. Business editor Greg Hoy reports.
Federal Treasurer Wayne Swan has
little wonder that so many Australians are so angry.
Wayne Swan is being treated like a fool by the banks.
Amidst howling headlines over the Commonwealth's audacious rate hike, bank stocks have continued their merry rise. The banks brimming with record profits, the latest revealed today. Westpac net profit up 84%, delivering $6.35 billion, big ones in the bank.
2010 has been another challenging year, and I'm pleased with our performance. This is a strong, high-quality result. The question is, what is the Westpac interest rate decision? And our answer is that we have not yet made a decision.
Funny, really. It's never hard to find a big bank executive on Good News Day, and Westpac's Gail Kelly was happy to bask in the glow of a beautiful set of numbers, helping justify her $10.6 million pay package. But nowhere to be seen was the Commonwealth's $16 million man, Ralph Norris, noticeably absent since the Commonwealth announced, in the post-race hangover of Melbourne Cup, that it would almost double yesterday's Reserve Bank rate hike, a move that proved about as popular as root canal therapy, setting the fox amongst the fowls, and not only in the nation's capital.
We want the government to really urgently look at competition in the sector now. What we're seeing, I think, with pricing and with the way consumers are treated is a function of a lack of competition in the sector.
I think consumers should have a good hard look at their bank and have a look around to see where there may be better options.
The government can huff and puff all it wants at the banks, but the bottom line is the banks are treating the Australian government with the same contempt that the Australian people are.
As often happens in times of trouble for the banking sector, it was the Australian Bankers Association forced to face the music today.
Well, I don't know exactly what the CBA's particular circumstances are. All I can say is that we can absorb these higher funding costs up to a point, but there does come a time when we need to be able to demonstrate that the Australian banking system is very safe, it is very stable. 30 cents in every dollar that we lend in Australia has to come from international investors. We've already seen that those international investors can be a bit skittish.
Well, I don't accept that, and more importantly, I don't think Australian consumers accept that. The banks seem to have forgotten that they've been announcing record profits over the last week, including Westpac today, and ordinary consumers just can't understand why they get hit in the pocket yet again at a time when the banks are doing so well with such huge profits.
But before we proceed, where is the elusive Ralph Norris?
Well, I don't blame him. I think if I was him, I'd be in hiding as well.
Well, no, I mean, that's a matter for the Commonwealth Bank. I'm sure they'll be happy to take your call on that, but I don't know.
So, we did call the CommBank. Eventually, we were told Mr. Norris was overseas. And where might that be, asked we, explaining we were more than happy to swing one of ABC's 14 foreign bureaus into action. Mr. Norris is on business and his whereabouts cannot be disclosed, we were reliably informed, leaving the Banks Association caught in the crossfire.
The banks know that these are very unpopular decisions. They don't take them lightly as a consequence. But look, there are other considerations the banks have to take into account when they price mortgages. Banks have had higher funding costs. We have been absorbing those higher funding costs for some time.
Most sensitive in this debate is the issue of whether the banks are or are not exaggerating the need to raise interest rates due to some increasing cost of wholesale funding on international markets. So what has the Reserve Bank said in relation to this? Well, following the Reserve Bank board meeting on October 5th, it was noted in the minutes. Board members noted staff estimates that bank funding costs had been relatively flat over recent months. While the spread between lending rates and funding costs was below its peak in 2009, it remained well above pre-global financial crisis levels.
Well, my understanding of what the Reserve has been saying is that they've said that the price of money today has stabilised, and it certainly has. It's stabilised at a much higher price than it was before the global financial crisis.
Well, the banks say that. The RBA say otherwise, and I would say consumers are more likely to believe the government and the RBA that wholesale funding costs are in fact flat.
So, bank greed or bank bashing? Let's face it, bank bashing is easy, can be quite fun, and they can easily afford it. But at risk of disappointing some, there's no question, as far as banking analysts are concerned, the costs of wholesale funding and the pressure to cut fees have reduced margins for the banks since the GFC. Though the Reserve Bank has noted this has been partially offset by the banks repricing their loans. Still, some question the wisdom of taking strident action on this just when profits hit record levels. A public relations disaster which has united opposing political forces and consumer advocates in a campaign for more competition through initiatives such as encouraging non-bank lenders and the like. And with wild talk of intervention to set rates, the banks are getting worried, or at least they say they are.
Well, look, we are at a level, we understand that the community is unhappy with these decisions. They are unpopular decisions. We understand that. We are very concerned with some of the proposals that have been put out by politicians. Some of the opposition's proposals, for example, are actually potentially quite damaging.
I outlined a 9-point plan on behalf of the Coalition to get greater competition into the banking sector. There are 9 levers that are available to the government today, including more power to the ACCC on price signalling.
We've already put out a range of reforms which are currently in the system and working. For example, from the 1st of July this year, we put in place procedures which will allow customers to contest unfair mortgage exit fees.
All the political parties are talking about this now, which is good, but what they're missing is the consumer perspective. We don't hear the voice of the consumer in all of this. So Choice as the people's watchdog, that's what we're going to do.
So hang in there, borrowers. Help is hopefully on the way. And it's nice to have a happy ending. But sadly, after today, that seems less likely.
Over the course of the next year, to see average funding costs continue to go up. We'd hope that they'd go up at a lesser rate than they've gone up during the course of the 2010 year. I think what we need is some really, cool heads and some quiet conversation to actually better explain how the world has structurally changed and that it won't go back to where it was before. And the most important change that we're experiencing here within Australia is that additional cost for us on funding.
Business editor Greg Hoy.